Alberto, I'm very, very excited to have you here. Thank you for being part of our sixth Alpha Talk, where we approach renowned economists to speak about Latin America, and we are really, really excited to have you here. Thanks everyone for being here. We will be talking with Alberto roughly for 45-50 minutes. If you have any question for him, please put that in the chat room, and I will go over them. And if we have time, we can do a Q&A at the end. So Alberto, I really appreciate your time for being here with us.
My pleasure, and many thanks for the invitation.
Sure. So Alberto, I think you have a long history in Goldman Sachs, but I would really like to know your side of the story. So I would like to begin maybe with some intro. Can you talk a little bit about you, about your background? You know, how you're, I mean, I'm also interested in knowing, you know, how you do economics. What's your methodology? So can you tell a little bit about you?
Absolutely. Well, I was born in Mozambique, East Africa. My parents are Portuguese. I lived there for 10 years. Then I went through high school in Lisbon, Portugal. Then I came to the US to study. You know, I studied at the University of Chicago, got a master's and a PhD there. I worked for a couple of years at the Chicago Fed. Then I worked at the IMF for a few more years.
Have you been there with Claudio Rigoshen? He was here a couple of weeks ago. I think he also was there in Chicago.
He's a few years younger than me, but
okay.
We certainly interacted. When I was at the IMF, I worked initially with the IMF program with Brazil, then with the IMF program with Argentina, and Claudio, which is a good friend, was working at the central bank at the time. And so that was when we got to know each other better, was when I was at the central bank, and we kept in touch up to today, and today he lives in New York. So I see him quite often.
There are probably hundreds of stories to tell about that negotiation, I think.
That's right. That's right. And then from the IMF, I came to Goldman. It was just 20 years in May, and I've been covering LATAM. Remains a very, very interesting region to cover. What is my framework? I mean, I look at data, and as you imagine, everything we do, we look from a perspective. Anything that can move asset prices is of interest to us. Could be economic developments, could be political and social developments. So anything that is happening in these countries, we consume that 24/7, always with a view what is the potential impact of these developments on asset prices.
And Alberto, are you, do you use econometrics a lot, or you are more of, trying to understand the politics behind the policy decisions? When you talk about data, of course, you have an infinite inflow of, from your team and from people, but you also have, a framework of modeling of, to mostly on the macro, to follow the macro.
Oh, absolutely. I mean, we have several macro models, some more complex, others more simple, in which we try, which we use as, to support our forecasts. We forecast the key variables for the economies we cover. And even in our research, we tend to be as analytically rigorous as we can, back from our training. And I actually put a lot of emphasis and weight when I recruit for my team, people that have a strong backbone in econometrics and quantitative methods, because I think nothing substitutes from very, very rigorous processing and analysis of data. And then, of course, comes a little bit of our experience in order to, modulate that and transfer that and connect that into a market view. That's definitely the case that we have.
And Alberto, do you have a working one for Argentina? Because
well,
I know a lot of smart people that have tried, and we have like a structural break every 4 years, and I have not found anyone who could do it.
I mean, Argentina has been defying gravity, to put it mildly. The macro has been so dysfunctional over the last few years that, of course, the econometric models and the data in particular has more noise than signal, as we usually put it. Structural breaks, a lot of volatility in the macro data. A few years ago, even questions about the integrity of the data, to which extent, for instance, the official CPI numbers, the official inflation numbers, or the official growth numbers were actually truly representative of what was going on in the economy. So, unfortunately, many times, the macro models do not provide good signal for what's going on in Argentina, and also because of the very, very large imbalances that we're witnessing these days, and an overlay of unsettled political dynamics probably requires more like an experienced hand than just like a pure econometric exercise.
And Alberto, let me go a little bit around that, because I understand that a big part of the problem with Argentina is not only of modeling Argentina. It's not only that we have structural rates, but also variables that in other countries or in other environments would be, endogenous. They are policy here in Argentina. For example, the trade balance. In any other country, you would model the trade balance, but here this is like a policy decision, and then you have the residue elsewhere. Do you think something like this may be happening in other countries of the region? As we are seeing more regulation everywhere, probably in the last 4 or 5 years. I will go into details later, but do you think the way policy making is being done in Latin America is at jeopardy? After probably 20 years of learning and better macro design, macro policy handling in the region?
You mean in the region or in Argentina?
In Latin America.
I mean, in Argentina, you're absolutely right. There are many variables that are policy objectives, and they are not policy objectives in many other places. And that is a reflection of very high levels of financial repression. We have capital controls, financial controls, price controls, exchange rate controls, trade controls, you name it, right? So in a way, many of these variables do not reflect market clearing prices, but the intervention and the regulation that keeps it trapped in ranges, that create other imbalances in the macroeconomy. When you talk about broader trends in the region, there's definitely a clear shift to the political left. Many of the administrations we have today across South America or Latin America in general have moved the pendulum to the left. We had Boric in Chile, Petro in Colombia, Castillo, it is now out of office, but Castillo in Peru. In Argentina is also like a populist leftist administration. The return of President Lula to the presidency in Brazil. So it's definitely the winds change. And I think with the changing political winds, I think the macro policy has changed as well. A lot of these new administrations, have a very clear view of what the government should do for the economy. The government should be the key engine of growth, investment, and development, and through basically government spending. And in that effort, they marshal the budget, but also the state-owned companies, the state-owned banks. I think many of them are also aware that the market is very sensitive to fiscal issues, and the market probably will not digest well very large unfunded fiscal expansions, right? So they seem to have embarked on a model of tax and spend. All of them have rather ambitious tax reforms that most of them are not actually a reform, but a tax package to increase taxes by a very significant amount. Think about Colombia, think about Brazil, think about Chile, in order to allow the public sector to spend more. Of course, there are a lot of problems with the tax and spend strategy, particularly when many of these governments are notoriously bad spenders and bad allocation of resources. So there is like an efficiency loss from extracting resources that are there managed and invested by the private sector and giving them to the public sector, where those resources probably are allocated in things with very low economic and social returns. So the other way to say is that spending has a very low multiplier effect in the economy. The fiscal spending multiplier is very low in these economies. So clearly, there is a shift to more interventionist governments, and from a fiscal standpoint to a tax and spend strategy, much all across.
But at the end of the day, it's surprising how even left-wing governments have been doing fiscal consolidation after the COVID. And probably the best example is Mexico. Mexico
right.
is like
I mean, fiscal consolidation is a strong word. Certainly, the fiscal improved. Mexico, differentiated itself by not validating a very large fiscal expansion during the pandemic, basically fiscal support to the economy, which was perceived initially to be a policy mistake, particularly when Mexico had policy room to do so. Ahead of the pandemic, they had a small primary balance. The debt to GDP was relatively low to moderate, under 50% of GDP. So they had fiscal space to eventually support the economy during the initial stages of the pandemic. Other countries that did not have significant fiscal space, like Brazil, used the fiscal levers to support the economy. So what happened in many of these economies that did engage in fiscal expansion during COVID is the recovery of fiscal balances that came after that. It's basically a reflection of the V-shaped recovery of the economies, which led to a recovery of the tax base. But also, the high inflation, the surge in inflation in the second stage of the pandemic also helped the fiscal balances, and also the surge in commodity prices. The commodity prices were, quite high. Then came the war in Europe. There was a second leg pushing prices up. So a combination of high inflation, high commodity prices, and high nominal growth, the V-shaped recovery, real GDP growth, plus inflation, led basically to the improvement in the fiscal balances. To be honest, we didn't see clear signs of significant fiscal consolidation, particularly in places where that is critically needed, Colombia and Brazil in particular.
Interesting. That looks like the early 2000s, where you see good figures elsewhere, everywhere, and usually explained just by the context more than, for example, in Argentina, we had like twin surplus, and it was not a policy, but as a result of the context. Right. So I have advanced a lot in the question. Let me roll back a little bit. I would like to, I already used some of the question for later, but who are your favorite economists? Who do you read?
It's a tough question. Who do I read? I mean, I like good economists. I'm just kidding. I mean, I like, the late Robert Lucas, he passed away a month ago or so, Tom Sargent, von Hayek. So economists that have a little bit of like a liberal view for the economy tend to be my favorite.
And okay, let me go back to economics. I was trying to look for, a name, someone I was missing there on a daily basis. But I know you guys on this question usually don't want to offend anyone. So, so Alberto, let's go to the U.S. economy. So, how are you looking at the U.S. economy? You think recession is coming ahead? What are your thoughts there?
Look, the U.S. economy is doing very well. We have a combination of resilient growth, a tight labor market, solid consumer confidence, a rebounding housing market. This is pushing back the fears of recession, despite the fact that the Fed has been signaling that will push the Fed funds rate maybe by another 2 rounds, another 2 hikes of 25. The banking stress issues that were concerning us, in the spring, have also receded to a significant way. Financial stocks are up with all this enthusiasm about artificial intelligence. The S&P, for instance, is up almost 15% in the year. The NASDAQ is on track to grow more than 30%, which will be the biggest gain in 40 years. So it's a very resilient backdrop. We're not out of the woods. Inflation is still a work in progress. The Fed is not done tightening. We think that once the Fed ends the tightening cycle, most likely will be on hold for a reasonable period of time, maybe up to 12 months, until we have, an inflation backdrop and a macro backdrop and a labor market backdrop that would allow them to move a little bit closer to neutral. The dollar is strengthening. So it's a resilient backdrop. What is the probability of a recession? It's lower than what we thought would be the case maybe a couple of months ago. We were always on the camp that there would be no recession in the US. We had a probability as high as 35%, but no recession in the baseline. We have reduced that probability to 25% today. And if there is a recession, may be coming about for other things not necessarily related to the monetary tightening cycle. So far so good. The economy has been pretty resilient. We have seen upward revisions in growth and a very strong macro backdrop.
And what are those other reasons that you have in mind, on top of your mind?
For an eventual contraction of activity, could be external factors and the length of the expansion, right? Of course, monetary policy will not be there to support the cycle or anything related to the credit cycle. There are significant concerns out there about the commercial real estate market. The number of vacancies there are very, very high. Whether there is some correction out there that eventually leads to a tightening of financial conditions and the deterioration of sentiment, but not necessarily nothing that can be directly possibly attributed to Fed policy.
Okay. And Alberto, what's your thoughts about the Fed policy? There is a reading that it was too little too late, that I've heard many people thinking that inflation problem may be more pervasive and permanent than what it's expected by the consensus. What's your thought there? Is inflation on its way to being solved? Do you think this will prevail for a long time? What's your thought on inflation?
Look, nothing lasts forever. Like eventually, inflation will come down, but inflation is highly generalized. And once it reaches very high levels and becomes highly generalized, it becomes very sticky. It becomes, or the price formation process become backward looking. It started to impact wage formation. So it's going to take a bit until we bring the genie back into the bottle. The Fed was definitely late in reacting to the surge in inflation. I'm actually personally a little bit even more critical than just the way they reacted to the inflation issue. I think the Fed should have started to remove the monetary accommodation when it was pretty clear that under massive fiscal stimulus, the economy recovered very quickly the pre-pandemic level. And then after that, the pre-pandemic trend. So at that point, in my own view, there was little justification for the Fed funds rate to be at zero and for the central bank to continue to buy $80 billion of assets per month, including mortgages, when the real estate prices were going up. So even before inflation became an issue, I think the macro picture was already justifying at least the removal of some of the accommodation. That was not the case. They were still, buying assets and kept rates at zero. Then came inflation. The initial characterization proved not to be correct. There was not just a temporary phenomenon, not just responding to supply issues. There was a significant demand component, and they started to react. Finally, they accelerated the pace. Today, we have monetary conditions that are already beyond neutral, but there was definitely a misassessment initially, and then a little bit of an hesitation, to move quickly to deal with it. But I think today, I think the Fed is more or less where it should be with monetary policy to deal with inflation. Inflation is now starting to move down as expected. The base effects are helping. We see also some signs of macro adjustment, including in the labor market, including on wages, but it's not yet close to where we need to be. Right? It's still a work in progress. It's going to take probably all of 2024 until we get more comfortable both with the labor market and the inflation dynamics.
Interesting. Alberto, that I usually find this bias from economists usually from Latin America. They are usually much more pessimistic about inflation. About the scare of the Fed going too easy, too quick. And when I talk with economists on the US, I usually they are more confident that inflation may be going down. So this is essentially, even in these talks, I've heard both views. People say, okay, I'm very scared that the Fed may start cutting rates, or and that I don't address that this is going to be here for a long time. And it's interesting because the more US, the more confident is that the Fed is going to make it.
Well, we have seen a lot of episodes of high inflation in the region, and we know how difficult it is.
Yes.
Once it impacts expectations, once it becomes very disseminated in the economy, once it starts to impact wage formation, how difficult it is, how much work it requires, how much discipline and focus from the monetary authority it takes to bring it back to more reasonable levels.
Indeed. So let's start going to back to the region, but I'd like to, if you could signal or describe what the biggest risks from the global economy to the region. What would you mention? The economic risks, the geopolitical risks. What looking forward, where would you think are the higher risks for the region?
I mean, when we look about the impact of the external environment on the Latin American economies, like the two key variables tends to be liquidity, basically capital flows, and commodity prices. As you know, most of the South American economies are key large commodity exporters. So when commodity prices are well bid, that implies that the terms of trade are strong. We see strong inflows, through the current account, and usually that also attracts, other sorts of capital. So also percolates and transmits a little bit to the capital account. The other one is liquidity. When global liquidity is abundant and cheap for a region that has relatively low domestic savings rate, that also helps to grease a little bit the wheels of growth and development. So anything globally that would eventually lead to a downward correction of commodity prices or an increase in risk premia, where global liquidity becomes more scarce or more expensive, those tend to be clear negative drivers for activity in the region. But I would just add that unfortunately we have so many issues domestically, right? That if we could fix them in a reasonable market and investor friendly way, we could go a long way to improve the performance of our economies without necessarily having to look at external environment. External environment can make life easier, but does not solve our problems.
Okay, so it's not like probably last year that when you do a list of how the global environment was looking, it looked bad. So on the margin, it's probably, if I understand what you're saying, is more now it's probably more neutral, and the what's going to happen in every country is more related to idiosyncratic factors more than the global factors.
Yeah, I mean, the external environment is normalizing, right? We had very vigorous growth. Once the physical restriction created by the pandemic receded, like there was a very acceleration of growth and global trade as the global supply chains, kind of mended. Liquidity was still very abundant because monetary and fiscal policy was very expansionary globally, and that generates spillovers to our economies. Commodity prices benefited from the disruption created by the war in Europe and by the acceleration of growth. So as an environment that was favorable, we're now seeing the normalization of that. Liquidity conditions are normalizing. Monetary and fiscal policy globally is in the process of returning back to somewhat more neutral levels. Commodity prices are not as high as what they used to be, but I would not, global growth is in the process of decelerating, but I would not necessarily say that these transition dynamics you're observing imply that the external environment is negative or adverse to Latin America. It is not, it's just less favorable.
So on the margin, if you have to compare it with 6 to 12 months ago, it has improved.
I mean, I think some of the risks have receded. I'm not saying it has improved. I mean, there were a few things out there, for instance, related to the probability of a recession in the US. Then came the spending ceiling discussion at Capitol Hill. We clear that hurdle. We're now a little bit more confident and positively surprised with the performance of the US economy. But there have been other disappointments, for instance, the reopening of China following the zero COVID policy as disappointed, and that translates into commodity prices. And many of our economies have significant linkages to the business cycle in China. So it's a little bit of a mixed picture of things that compared with 6 months ago got better, and others that probably got worse. And China is definitely one that surprised on the downside. Got it.
So let's go with a review of the countries, country by country, if you rather. Let's begin with Mexico. Mexico, an economy that it's usually like a mirror of the US. Every time I speak with an economy from Mexico, they say, okay, in the US it's happening this and that. So and that is playing a big chunk of what they expect for Mexico. It has been, looking in hindsight, it has been macro conservative, what we discussed about the fiscal deficit, but it has been its growth has been very, very poor in the last 20 years. Do you think there is an opportunity there in Mexico? What's your view on the Mexican economy looking forward?
Look, Luciano, if it is like a mirror image of the US, it's certainly a distorted mirror image of the US. But I think what you meant, and I agree, is that there are very, very strong linkages between activity in Mexico and activity in the US, and also through non-activity, like look at remittances, look at FDI, tourism flows. So there are, several channels when the US economy is doing well that certainly creates significant tailwinds for activity in Mexico, and the opposite also holds true. The US is going through a period of contracting activity or decelerating that also transmits to Mexico. Mexico is doing relatively well. When we talk to investors and when we talk about Latin America, it seems to be a differentiated story. For instance, when you talk about every single country in LATAM we talk to, we can identify at least one clear macroeconomic imbalance that requires corrective policy action. It could be medium-term fiscal consolidation issues in Colombia, in Brazil. It could be large current account deficits in Colombia and Chile. Well, in the case of Argentina, you name your favorite macroeconomic imbalance, because unfortunately, we seem to have them all, and in size. When you look at Mexico, the macro picture, it actually hangs together. There is nothing that stands out. So here we have an imbalance that requires some corrective action, or if it's not fixed, and this is going to end up in tears. The economy is growing, the labor market is tight, monetary policy is relatively credible, fiscal policy is also strong. The country is running basically a balanced budget at the primary balance level. The debt to GDP is relatively stable at a moderate level, about 50% of GDP. The current account is well anchored, a deficit of less than $20 billion, less than 2% of GDP. You have remittances flows of about $5 billion a month. That's about $60 billion a year, 4% of GDP. The capital account, we've seen capital flows resuming over the last 2 quarters. After 2.5 years of divestment of basically portfolio outflows, we see portfolio money returning to Mexico. And then beyond that, there is the overarching narrative of the nearshoring, of the friendly shoring, given the frictions, and strategic rivalry between the US and China that's probably going to last many decades. The rethinking in corporate boards that you don't want to be dependent on suppliers that are too far away from you, because very long and complex supply chains are prone to disruption. I think Mexico, more than anyone else in the region, could eventually benefit from that. It's not a slam dunk. Mexico also has issues that go against that, supply of water.
Because at the end of the day, that history holds, but Mexico has grown 1% in the last 20 years.
It's a very unproductive economy. You're absolutely right, and that's the sad story about Latin America, is that real GDP growth has been very, very disappointing. And we're talking particularly the large economies, Brazil, Argentina, Mexico. When you look at growth over the last 15, 20, 30 years, has been disappointingly slow and with a lot of macro volatility. It's not that just that the average is really low, but the boom and bust and the jumps in inflation, in rates, in growth has created a lot of welfare destruction. But this is an opportunity. The other thing, that probably differentiates Mexico from the rest of Latin America is that the political dynamics seem relatively stable. They are not great, right? Don't get me wrong. But we have President López Obrador remains relatively popular. There are no clear political challengers. We don't have the political noise that we see in Colombia or in Chile, this friction between, the administrations and the respective congresses. In Argentina, also a certain level of social and political pressure. In Argentina, the transition, with President Lula returning to power, also generating a lot of market noise. We are going to go to early elections in Ecuador. We have a president that was impeached and is in prison in Peru. So it seems that even the political dynamics is not generating the noise or the type of noise that scares investors. So Mexico seems to be in a good place. That being said, and you already pointed it out, it's a very unproductive economy. Potential GDP is very low. Productivity growth is low. The opportunity is out there. Again, but they have to fix the issues of security, water supply, energy supply, and a number of others, so that nearshoring opportunity that is presenting itself, that they can capture a bigger slice of that.
Okay, and Brazil, what's your reading on the new Lula administration?
In generally negative. I think it's though not surprising. When we wrote our outlook for Brazil in October, November of last year, I think modesty apart, I think we got the right call that the fiscal anchor would be eroded. They had the fiscal anchor, the constitutional spending ceiling that would limit the increase in spending, was substituted by another anchor that is a lot more complex and really not as sturdy and solid as the previous one. This is an administration, as I was mentioning at the beginning, that believes that the public sector should be the key engine of growth, and we need to spend more. And the public banks and the state-owned companies should line up behind to support the economy. The central bank should cut rates aggressively. So it's a light populist model. We have seen it, and we have seen the results of it as well. But I was also of the view that they're not going to go overboard, at least on the fiscal policy, because they know the market will not tolerate. I mean, tolerate in the good sense that the market will, asset prices will react in a negative way if they were to validate the very large fiscal expansion. But I'm quite concerned, not necessarily at the macro level. At the macro level, we still have a conservative, respected central bank. At the fiscal level, I think they will spend more, they will tax more. Again, it's not necessarily a good equilibrium, but does not lead to a very significant deterioration of the fiscal or the public debt dynamics. But at the micro level, the policies are really, second rate, or even worse rate than second. We see interference in relative prices, from the price of credit to the price of fuel, state-owned companies that are pushed to pursue non-commercial objectives, public companies that are being backed with political appointees, some erosion of some of the structural reforms that were approved in the past. And we talked, let me finish it, like when we say like micro policies, not because they are small, insignificant, microscopic, it's just because they happen in the microsphere of the economy. They're actually quite important, and they can do a lot of damage. And we saw how much damage bad microeconomic policies that lead to a misallocation of resources, how much damage they can do. We saw that under the presidency of Dilma Rousseff, and we see that in Argentina probably on a daily basis.
Well, Brazil is another example of a country that has been stagnant for a very long time. So it's almost zero growth. I think it's zero growth in the last decade.
Last years, and it is. It's a very sad story in that regard.
And sometimes I'm surprised that the market is not punishing that, because at the end of the day, they have very, very high, real rates. So there's probably this temptation of being there, on the carry trade. But the debt numbers of Brazil are the likely dynamics of the debt are not that good when you look at macro imbalances. It's not like Mexico, where you have a stable fiscal figures. In Brazil, it's like the fiscal numbers are, they run a big fiscal deficit for a long time, and the market has been surprisingly quiet. I don't know if you think that there is some risk of balance of payment risk or capital reversal there in Brazil.
Look, that's an interesting question. There's absolutely, you're right. I mean, the fiscal is a major issue. It's not a new issue. It's an old issue. And we see, the debt dynamics are far from stabilizing. They are still far from generating the primary fiscal balance that is required to stabilize the debt dynamics. Whenever we reach that magical date, which is not around the corner, we need to continue to elevate the primary surplus so that we put the debt dynamics on a declining trend, because you don't want to stabilize that at 80% of GDP, because it makes you, very vulnerable to all sorts of shocks. I don't see the reforms or the inclination by this administration and by Congress in general to validate that. Now, will that translate in the short term into a major macroeconomic crisis, a funding crisis, a balance of payments crisis? The answer is probably not. Brazil, for instance, when you compare like Brazil and Argentina, or Mexico, Brazil and Argentina,
it's too big to fail.
It's not too big to fail. Is that they have a very deep liquid local market where the public sector can satisfy its funding needs in local currency. Right? It has macroeconomic implications, don't get me wrong. And while Argentina is to a certain extent always dependent on the kindness of strangers, either they have to borrow abroad massively, and when the market abroad, says no mas, that we already have, too much debt, and more. You run into problems, then we go and engage the IMF, which is another stranger, which is another non-resident. That's a reflection that the domestic capital markets is relatively small and shallow. Now, let me just add this, because this is a very important discussion. even if we don't think that Brazil is about to experience a fiscal-driven macroeconomic crisis, like a debt crisis, that does not mean that having very high debt is neutral to the economy. Far from it. We actually published a paper about a couple of years ago that got a lot of mileage, basically highlighting what are the costs of high debt regimes. What are the costs of having high debt, even if you don't expect a funding crisis? And there are several. The empirical literature is very compelling that countries with high debt tend to grow less on average than countries with low debt. Countries with high debt tend to have much higher macro volatility than countries with low debt, like volatility of interest rates, volatility of the business cycle, volatility of the inflation process. Countries with high debt are closer to a fiscal dominant situation. Countries with high debt tend to have low fiscal multipliers, meaning that because you have high debt, if in a crisis, in a downturn, you want to use fiscal policy to support demand, the bang for your buck by spending more is lower because the high debt leads to concerns about that sustainability, tightening of financial conditions. So there are many channels that reduce the fiscal multiplier. In some cases, particularly in Brazil, when that at such a high level, the fiscal multiplier becomes very quickly negative. The more you spend, the less you grow, right? So even if you don't have a debt crisis, beware that high debt has significant and costly macroeconomic consequences. So there are benefits in reducing the debt, even if you think you're not going to experience a debt crisis.
Interesting. And is there any other country in the region where you think is in the same situation that Brazil?
I mean, fiscal consolidation is needed in a number of places. I think Colombia, after Brazil, is the one where, the medium-term fiscal dynamics are more pressing. Argentina, fiscally is, and particularly the way the deficit is recurrently funded by money creation, by monetization, creates all sorts of imbalances from inflation and to other in an environment of low policy credibility, low confidence in the local currency. So those are the countries where I'd say, the fiscal is probably at the center of the macro imbalances that need to be addressed.
So let's double click on Colombia, because indeed Colombia is moving the other way around. No? Probably they are now discussing reforms on the side of spending more and being less more populist on their expenditure side. So what's your take on what's going on in Colombia?
I mean, we call them reforms because they are changes and constitutional changes. To me, a reform is something that makes things better. If you reform your house, it's supposed to be looking better, after the reform. They have ambitious policy initiatives on labor legislation, on the social security system, on pensions, on taxes that was already approved, on the way the healthcare system is organized. So President Petro has bold ideas, but he does not have all the political support he would like to. So that is creating a little bit of friction between the Petro administration in Congress, which is kind of acting a little bit, or more than a little bit, as an institutional check and balance. President Petro is a very combative individual, is a man of strong convictions, and that also raises risks that that type of noise reaches levels that concerns the market. So some of these reforms or legislative packages, many of them are not perceived to be particularly market friendly, and that is a source of concern.
I see. Just a comment. Yeah, if anyone in the room wants to make a question, please put that on the chat room. I will go over them, and if we have time, I will pass them to Alberto. But let's move on to Chile. Chile is probably the other country where they try to make reforms, and now they are I would not say backslashing, but probably that's part of the past. What's your view on Chile looking forward?
I mean, there was also like a clear political transition. The people were unhappy. The political pendulum shifted to the left, significantly to the left. There was a first failed attempt to reform the constitution. We're now trying to, get it done in the second attempt. It's unclear what type of content will go into the new constitution, but that type of uncertainty has lingered for several years. President Boric lost popularity very quickly. But he's kind of accepting that the political equilibrium is such that he cannot do the things that he would like to do, that he has to negotiate, he has to water down some of those bills, starting with the tax reform that is stuck in Congress, the pension reform that is also stuck in Congress. So he had been forced by the broader political environment to water down some of those initiatives. That's where we are. I think there were a bunch of mistakes committed during the management of COVID, particularly the several rounds of withdrawals of savings in the pension funds, which could create some medium and long-term problems. The economy was overly stimulated. The output gap became positive, forced the central bank to tighten very, very significantly. We're now seeing a little bit some gradual rebalancing of the economy, but there was an economy that had inflation, overheating, and the fiscal, the good thing for Chile is that they started very good initial conditions. There was a massive fiscal expansion. This is another government that believes in tax and spend. They want to spend more, and they had a tax reform to raise around 4.5% of GDP in new taxes. Not going to come close to that, but it was part of the overall view, without again, validating very large fiscal deficits, but I want to extract a lot more resources so that I can spend a lot more. So there is still some political and social risk. There were violent demonstrations not a long time ago. But let me just, make a broader point that applies to Chile, but also other economies, and is related to what you mentioned, that the growth performance of Latin America has been very, very disappointing. It's the slowest growth region in the planet, punto, maybe compared with sub-Saharan Africa. If you look at emerging Asia, emerging Europe, even developed economies, we are falling behind severely. And that is not something that was preordained. It's a reflection of poor policy choices by many of these economies, right? There's nothing written in stone that says Latin America cannot grow, particularly when we have a number of key advantages in the agricultural sector, in mining, and many others, right? And that is generating a lot of social pressure. The average citizen is crying out loud in public square that their social economic progress has been quite low, and they are right. This is unacceptable. They are voicing, they are being, they are being concerned because this economy should be doing much better. Living standards should be improving, and they are not. Now, it's always possible to make a difficult situation even worse. Right? The solution to that, it's not populism, right? And what I'm concerned is that, we, in that pressure, in that desperation of seeing better things, that we end up doubling down on bad policies. And as you know, that social pressure also starts to generate political pressure and pressure over institutions. So if we don't, over the next 3 or 5 years, find a way to accelerate growth through higher investment, I'm starting to get quite concerned that this environment of very sluggish, low growth, could increase social pressure again and make these economies very difficult to govern.
Okay, and the interesting thing is that this happened even in relatively high growth economies such as Colombia and Peru. They are no Asian growth, but they were the high growers of the region.
It is true. I mean, there is a deep distrust of the institutions. There were high-level cases of corruption pretty much everywhere. This sensation that we live in an environment of corruption and impunity. These institutions are self-serving. So people start to question, the architecture, the institutional architecture, the institutional design of those countries. And even though, growth was, as you mentioned, decent and certainly trickled down, right? Where probably not as much as they would like to. People want different things. And that,
Alberto, do you think, because for sure this is happening in Latin America, but probably this is happening more worldwide, because at the end of the day, it's the same story that you can find in other countries, including US and in Europe. And there's probably part of a bigger story where growth in the last 20 years was globally, you had a better distribution of income, but within the countries, you're seeing worse distribution of income. Do you think there might be something?
Absolutely. I mean, you see that in the US, as you mentioned. In Europe seems to be that the collapse of the traditional political structures, the distinction between left and right became a lot more diffuse, and we see in many places political choices that go more to the extremes, being it left or right. It seems that the center is no longer generating enough gravity to bring the average voters. Is so dissatisfied with the political establishment that you try to go into outsiders and with the risk that entails.
Let's come to Argentina, because I think that Argentina is like the world is Argentina of the future, or the opposite, because it's like we begin 10 years earlier. Many of the discussions that we see worldwide, we have seen them like 10 years earlier. And right now we are like in the middle of the swing of consensus and public opinion from left to right. This is clear. It's quite noticeable. How do you think? What's your take for Argentina after December 10th, when the new administration arrives, wherever that is?
Look, Luciano, I wish I knew. I see, so many, experts here, on the call. Look, the situation is very, very difficult, goes without saying. I mean, the macro imbalances are huge. Triple-digit inflation tells you as much as you need to know. The levels of financial repression are also very, very high. We have a central bank that has like negative net reserves. There is a wide gap between the official exchange rate and the non-official rates. So this is a huge.
Let me state the question different. In 2015, when there was a swing in the government, there was like this huge optimist boom. That the populism is over, and now we have an opportunity. Do you think that where we are heading right now may look like that? Do you look? I don't know if you shared that vision in 2015, but do you think we may be heading with a change in the government, to an opportunity like what we had in 2015, or problems are big enough for the change to not be enough?
I mean, the problems are very, very big. It's going to be very, very difficult, no matter who gets to be elected, to deal with this situation. The imbalances are so big that once you start to deal with them, things can follow their own course. The capacity for you to manage the adjustment is very limited at this stage. One thing is to manage, when inflation is at 8 and bringing down to 3%. The other thing is to manage when inflation is at 120 and bring it down to more moderate levels. One thing is when you have some slight capital controls and you want to remove them. One thing is to think about this, all the capital controls you can imagine, and the economy is, the macroeconomy is so dysfunctional at this stage that once you start to disarm that, it's very difficult to control the process, right? IMF or no IMF, it's going to be a very difficult, possibly chaotic process. But unfortunately, at this stage, things got to such deep level of economic dysfunction, of economic disrepair, that it's going to be messy. I mean, it's not an easy thing to solve, even if you hire Ben Bernanke and some top economists to go there and they try to fix the economy. It's going to be very difficult. It requires a lot of skill and a lot of luck. But we know that the longer you wait, it's going to be even worse. We know that this is not working. The numbers tell you that, right? That we need to move to more conventional policies. That idea of Argentina's exceptionalism. I mean, I cover a lot of countries, right? And it's probably the only country where I hear that there is a structural shortage of dollars.
There is something in the water here. I've heard.
Yeah, but we have great wine, though. I never heard of this idea of a structural shortage of dollars. It's something idea that is really only Argentine. And just let the currency be where it be. There will be no shortage of dollars. There is a shortage of credibility. That's for sure. So it's going to be very, very difficult. Look, I think we waited too long and we kept on, moving into policies that created these imbalances. And I would not, to paraphrase, Winston Churchill, I think in the short term is blood, sweat, and tears, I'm afraid, until things get better. Look, but this is a problem with a solution. Nothing lasts forever. We don't need to create a commission of experts to analyze and produce a report, on the way forward. We know what's wrong and we know how to fix it. That being said, it's easier said than done. because it's painful. It's painful from an economic standpoint. It's painful from a social standpoint. But we have to fix it because the problem is getting worse. Right? It's unfortunately there is no magical bullet to solve it. Unfortunately.
So at the end of the day, thinking on the financial side, do you think that the prices of our bonds are okay?
Well, I'm not going to opine on that. I think the prices of the bonds reflect, a lot of what you need to know. Think about where par is and how they trade. They tell you, that gap is already a clear reflection of what the market thinks of the macro story and the risks embedded in it. People look at bond prices and they look at recovery rates in the case of another, that episode. But as you mentioned now, there are two questions now. One is, post-election, what is the macro policy mix? It's more of the same, or it's better, right? More conventional, more orthodox. And the second one is implementation capacity. Is the country, the political class, society in general ready for it? Because it's not going to be pretty. In the short term, it's not going to be pretty. And the happy day, you have to cross the desert and the very bumpy road until we get to a better place. And there is no other way to get there.
And let me add to that discussion is not happening. And it has not happened for a long time in the public consensus, in the media. You don't see that discussion. So I'm not sure if people is ready or really understand what needs to be done. So Alberto, we are on time, so this has been great. We have covered many things, so I really appreciate you being here with us, and thank you very much for sharing your thoughts.
Absolutely, many thanks, Luciano. Great to see some familiar names here on Zoom. I apologize for my informal look. Today is Friday; it's half day. I forgot to bring a shirt and tie. It's not a sign of disrespect.
I did not notice that. Don't worry. Alberto, thank you very much. Thanks everyone for being here. We will be uploading the meeting probably during the afternoon, and we will share it through our usual channels. Thank you, Alberto.
Thank you, Luciano. Thank you. Thanks, everybody.
Bye-bye.